Hello, welcome to Babuiji Time Episode 1. Today is June 6th, first week of June. How's the market looking?
Yeah, so looking at the markets, it's been a crazy ride, especially yesterday. Donald Trump and Elon Musk
What a
really
day.
had a big spat, right? Like I think we all saw what was happening real time,
Mm-hmm.
and it really, it really did impact Tesla's price action significantly, especially at the market close to market closing, and it brought down the Nasdaq market along with it. Like
Oh, yeah.
TQQQ, like went from I think 74
Mm-hmm.
to 72 by the end, so that was pretty
Actually, it
crazy.
looks like it recovered back to 74. All things considered, it was like a pretty small. Well, I mean, yesterday, right? Yes.
Yeah,
Yesterday, it was definitely in the 72s. Um,
yeah.
but honestly, aside from that one day, it looks like Nasdaq is just on track. Um,
Yeah. Nasdaq has definitely been on a tear just over the last like a month or so, month and a half, I think.
mhm.
Um, and I really do think that this is just more confirmation that one, this rally has legs, and two, we are entering a risk on like regime of some sort where markets are just starting to full send money into the queues.
Mm-hmm.
And I think that this is a great indicator to start adding, your cash in if
Mm-hmm.
you're still on the sidelines, as a lot of the volatility that we've been dealing with, like, especially Trump's tariff announcements and all the other, trade agreement like chaos, it's been smoothing out. If you look at the VIX has been pretty interesting.
Mm-hmm.
Nonstop crushing every day. Like the VIX, what is it right now? I'm just gonna pull it up.
16.78.
Yeah,
Yeah.
yeah, 16. And what did it begin like on Monday? It was whew,
Ooh, looks like around
8?
20. 20.
Yeah, yeah.
Yeah.
So you went from elevated VIX to a level that I consider like pretty bullish for
Mm-hmm.
all the overall markets. And if we just keep getting this VIX crush, I do think more cash will be deployed from the sidelines, and it's just gonna start going into risk on assets. Like we're already starting to see some of that happen. We saw Bitcoin take a bit of a dive yesterday,
Mm-hmm.
but it quickly recovered. Like it just kept getting bids and bids like throughout the whole day today, and we're back at round like 105 from the lows of 102 yesterday.
I think like just looking at the VIX itself, I think VIX is generally a good indicator. For those who don't know, VIX stands for the Volatility Index. It's a measure of how obviously volatile the market is. And it's an index, so they scan the entire market. I'm not exactly sure how they calculate the exact numbers, but it is a very useful tool. I think one thing to highlight is that the VIX is returning to the average we had when we had those bull runs back in 2024, and the same bull runs we had, I think, in near the end of 2023. I think in 2023, things were a little bit, near the end of it especially, they were a little bit calmer. I think 2024
Oh,
was a very, very good bull year, but I think we're just slowly coming back to the same VIX levels. Um, I think in
yeah.
terms of macros, I think we both agree, I think, that macro wise, everything is okay. I mean, at the moment we're in a event
Everything
event
for
driven
now.
event we're in an event driven market at the moment
Yeah,
where
yeah,
the events are the one that drive the market forces.
yeah,
So I am quite curious to see what still does happen with the July tariffs.
yes.
But
Deadline's coming in soon.
apart from that, how have the macros been looking? We've been talking about macros, but let's talk about what they are and what do we look at in particular.
Yeah, absolutely. So, this is funny to say, but one of the macros that we look at aside from the VIX is definitely Bitcoin. So
Mm-hmm.
I already mentioned that, in our initial, I think, couple of seconds into this podcast. But essentially, we look at Bitcoin as a leading indicator for risk appetite because, as we talked about Bitcoin, like what is it, right? It's ultimately the cryptocurrency of the
Mm-hmm.
world, and
Modern
it's
day
been
gold.
yeah, that's what people say. That's what the maxis, the people who really really all in Bitcoin. That's what they say. They say that Bitcoin is the future. It's going to replace like U.S. dollar. It's going to replace fiat money. When the end of the world comes, we can all use Bitcoin to trade. Now, I think a lot of that is nonsense,
I
and we
agree
get
with that. Yeah.
right. We can definitely get into that later.
Yeah.
But ultimately, um, whether we like it or not, like whether we believe in Bitcoin or we don't, at the end of the day, it is the storage of value right now.
Mm-hmm.
It's gone from, I think, 50,000 last year summer or so,
Mm-hmm.
down a double to like around 100,000 now, right?
Oh yeah.
Slightly above,
Yeah, I think at the
right?
lowest of August it was 50. That the absolute low was 49,000. So that's exactly
Yeah,
on the head.
yeah, exactly, right. So we can say what we will about Bitcoin and how it's not real money, but liquidity is being drawn into it, and it's being stored into this cryptocurrency. And until we see a breakdown of that pattern where markets rip and Bitcoin, stagnates or it's not getting any bids,
Yeah.
I personally believe that we can use it as an indicator for our trades, and I personally do that before whenever I make trades on the Qs or in other risk on assets. I take a look at Bitcoin and I see where it's trending, and I give myself, you know, the measure that if Bitcoin is doing well, the rest of the market should be doing well too. But if it's not doing super hot, other markets could also be just following it in the next couple of days or weeks.
And I think like why Bitcoin is so good, like not only because, well, the biggest thing I think for me is that Bitcoin is something you can track 24/7, all days of the week, even on weekends. And like where you don't know what's going to happen, Bitcoin is your, I think, number one source, especially if you're with other risk on assets, then you kind of can tell what's going to happen to the market by what happens to Bitcoin. And because of its speculative nature, it's far more event driven, far more sentiment driven. So when people are worrying about anything, whether that be, like tax cuts, whether that be tariffs, whether that be federal interest rates, or, job loss, etc., all of it ends up being reflected in some way in the Bitcoin. Now, to be fair, I have seen Bitcoin perform bullish for no reason. Just for the sake of going up, it goes up. Doesn't make sense why it's going up. It's going up, and that does happen. So that's, yeah, you have to be a little bit careful there. But generally, when things are a little bit not as extreme, it's a very good indicator.
It is, right? And just on top of that, Bitcoin is usually front run on a lot of different events. Like for example, if you go back to the Trump victory back
Mm-hmm.
in November, Bitcoin just got it literally just demonstrated God candles, just God big green candles every
Yep.
day
Yep.
for like 2 weeks.
Yep.
And stocks associated with Bitcoin like Coinbase or MicroStrategies, they just doubled. They doubled, and their leverage counterparts like quadrupled, right? So it's quite interesting how the sentiment and the euphoria that is used to drive Bitcoin to new territory, it definitely does gets spilled over to the overall other markets, mainly the Nasdaq,
Mm-hmm.
and it's meant to further highlight how when risk sentiment is growing or is reemerging from its risk off slumber, Bitcoin is usually the first one that kind of gets that bid, and it gives you the idea that growth is coming back.
Mm-hmm.
Yeah. Now, with that said, though, I also want to kind of explain why Bitcoin will definitely not replace the dollar.
I think does it need explanation? Let's go for it though.
You know what? I think we should
Okay.
just to clarify. For those people who are worried about how Donald Trump is gonna destroy the U.S. dollar and the world economy as we know it, right? Because let's be honest, there's a lot of misinformation out there, especially with the maxis just shilling Bitcoin as the end all be all.
That's fair.
That's not. It's not. I not only what I say is not necessarily like accurate or true, but I would say it's completely false. And one of the reasons why that's the case is because if you think about how big the world economy is, right? You just pull up the GDP of the world, right?
Yeah, I think
The
we do
world
actually.
GDP, like, what is that? That's like what $106 trillion, right?
Mm-hmm.
So $106 trillion. That's a lot of value of goods and services that just gets provided every year, every day, every second, right?
Mm-hmm.
And we're gonna talk about how Bitcoin, and I'm gonna search up Bitcoin's market cap right now.
Mm-hmm.
It's around. I think it says like 1 trillion. No,
Is it 1 trillion?
kind
I
of hard
think
to
it's
tell. Like
more.
it's like 2.2 trillion. That's what
Mm-hmm.
it says on Coin Market Cap.
Okay.
So around 2.2 trillion, right? So you're basically telling me that this currency, this currency, 2.2 trillion value market cap,
Mm-hmm.
which each coin is like $100,000 by the ways.
Mm-hmm.
You can break that up and somehow you can use that liquidity to lubricate $100 trillion worth of trade. I find that as nonsense. I genuinely don't believe that it can replace the US dollar. Because even if you look at the USD,
Mm-hmm.
the amount of supply out there, I don't have the ballpark with me, but if I just look at the US national debt as a proxy, because that debt is used to symbolize how many treasury bills are out there in the market, you can't possibly have 2.2 trillion value of like Bitcoin being used to replace that large of a liquid asset because you have giant pension funds and institutions which need to store capital
Mm-hmm.
in case in case they need to save it for emergencies or for their clients and for retirements and for just general conservative investment, right? If you're managing trillions of dollars of capital for your clients and they're in their 65 years and they're about to retire, you definitely don't want to store your value, your cash value in Bitcoin or other cryptocurrencies. You want to store it in something more stable, something more regulated,
Mm-hmm.
and definitely something that is controlled by a respectable and credible authority,
I mean, I think
which in
the
this case is
biggest
the
thing
federal.
is regulation, right? I mean, if
Yeah,
anyone wants, like for example, I don't know how often this happens, but I know people like very close family members or family friends who have lost their wallet ID because the service who used to make the wallet for them, they shut down. And I've also had cases of wallet theft where the coins in their wallet were slowly being drained by someone else. Like these things happen, and if anything happens, none of the money is insured. So if you lose it, it's gone into the void or into someone's pockets. Um,
that's right.
and like
Yeah,
otherwise, traditional money, you have a portion of it insured. I think like in Canada, I think there's like a different tiers of insurance, and some of them are insured to 100,000. I think some of them are more, and I'm and so on and so forth. I think even like trading platforms like Robinhood, I think they only insure up to, I could be wrong, up to $1 million. I mean, after that, it's just your liability, but at least you have that level of safety
yeah,
with more traditional platforms. Um,
yeah.
I think that's the second point. I think the bigger point about Bitcoin, right? I think Bitcoin has value solely because people think it has value. Um, and I think this is the same way with gold. And I want to like kind of give this analogy here, is that I think Bitcoin and gold are very similar in that aspect, because what is gold fundamentally? Yes, it's a precious metal. Yes, it's useful for electronics, for conductivity. It's a soft metal. It has like when it comes to metals, it has pretty okay properties. It's nothing exceptional, but the reason why we give it value traditionally was because aesthetically it was shiny and it was rare up until a certain point, and it looked good, and that's why we gave it value. So we give it value for something like aesthetics. When we look at the markets today, or what Bitcoin is today, it's on a lot in the way very similar. Bitcoin is quote unquote the modern day gold because it was like the first thing that really showed up. And now that people seem to believe in it, as long as the belief exists, Bitcoin won't go to $0 tomorrow. And I know, like for a lot of people, the fear of investing in crypto is that the next day or the day after, all of your money is gone, or like it's gone by 50%. I think the 50% thing can happen, but I don't think you're going to ever lose your money outright overnight or even within like a very short time for Bitcoin because at this point, and it's like it's slowly the longer it lasts, passing like the test of time, where it might get to a point where it might genuinely become something that's accepted as like, hey, Bitcoin has value and it's going to stick around. And I think in especially in Bitcoin's case, I think it's staying around for at least a decade, 2 decades. What do you think?
Well, I think it's quite comedic if you make that comment because most currencies have to definitely last more than that to be
Yeah,
considered a legitimate currency, right? The U.S. dollar has been here for over like
hundreds of years.
200 years, right? Hundreds of years, right? 2 centuries, give or take. So I do find it a little bit laughable for you to say something like, "Hey, this is a respectable currency because it's going to last for another 10 years or 20
It's not
years."
a currency at
Um,
all. I think I look at it as like it's an asset that
Stores are valid.
I mean I don't think it would ever be a currency. If maybe
No, I
I'm
don't think so.
wrong. If I feel like if anything were to be a currency, it'd be Ethereum because Ethereum actually has a
Yeah,
contract attached to it, right? It's like a
yeah,
actually a contract type currency.
exactly,
Um,
exactly. And we've seen how the price action of Ethereum is happening right now, and it's definitely not looking super good. So
yeah.
yeah, and we can always get into that another time, but
Mm-hmm.
specifically just focusing on Bitcoin, right? It is, I regard it as a storage of value. There is confidence in this asset, and it is an asset of its own class. Like, I wouldn't even try to bridge it with the other cryptocurrencies. Sometimes they highly correlate when Bitcoin really goes through a drawdown, like a crypto winter of some sorts.
Mm-hmm.
The other shitcoins and altcoins really follow it, like Shiba Inu or like Dogecoin. Like all those coins will go down with it, but they go down way harder. The drawdown is much stronger, and I think it's mainly because of the fact that you have institutional money moving into cryptocurrency now, and it's
Mm-hmm.
providing a level of stability that the market did not have. Because if you think about it, if you have very small pool of liquidity, mainly driven by maxis and retail, you can destabilize that market very quickly
Yeah.
if a whale just comes in and liquidates.
Mm-hmm.
But if you have pillars of support from institutions and they're allocating billions into crypto, it's harder for them to act on the whim and just draw down or systematically sell everything. Like it's so over, and then they just sell everything because they're handling large transactions, and that can definitely create red candles that will draw a lot of attention.
Mm-hmm.
So yeah, like on that note, I would recommend people to try to consider looking at it as one of their instruments when they trade. And even when you are on like risk on like regime, try to allocate some capital into this asset class, a little bit of it,
Mm-hmm.
because you definitely want to get that exposure, especially if you want to overperform the market.
And I think because like it seems to me, at least for now with Trump and like the U.S. government is willing to put money in Bitcoin, so that's at least some guarantee. And
Yeah.
to be fair, where I don't think either of us are advocating that you actually go buy Bitcoin from an
No,
actual
no,
Bitcoin
you're
like
not.
crypto like vendor. We're recommending you buy a Bitcoin based ETF. There are
Yes,
a
that's right.
handful out there. I think the ones that we are familiar with are like we use pretty often are BitB and BitX. Um,
Yes.
there's also iBit. I think is iBit another one? I think it is.
iBit is another one.
Yeah,
Yeah, yeah. There's a couple, and if you're
there
a
are a few.
Canadian listener, there's also Canadian like ETFs as well. We can always like bring that up
That's true.
if anyone is interested. But there are so many like ETFs that track Bitcoin now. It has taken a life of its own, right? There's a
Mm-hmm.
lot of institutions that see that there are demand for it, and they will capitalize and bandwagon on this asset class despite the reputation that it may still have, especially when you're looking at boomer investors who think this is just pure gambling.
Dude, I'm actually quite surprised that they the Bitcoin ETFs were actually passed.
Oh yeah,
I
me
think the
too, bro. I
fact
was
that they were
surprised too.
passed is a huge tell. It's like a
Yeah,
very positive thing for Bitcoin
yeah.
and
It's
like
it's
Bitcoin investment.
essentially yeah, it's essentially the big investors saying, you know what, if you can't fight the system, join the system, right? Now, is this a system? No, absolutely not. It's a minority in all the asset classes.
Mm-hmm.
But you're getting buy-in from big party like investors, like institutions,
Mm-hmm.
and once you get that, taking them out, you would need a large catalyst. Like you would have to like just irreversibly destroy the reputation of Bitcoin and have it draw down to something horrible
To
for
be fair,
institutions to walk.
it has happened before, so never say never.
Yeah, yeah, it has, right? Like this thing can
Mm-hmm.
draw down like 40%,
Mm-hmm.
and that's considered normal. That's considered healthy,
I don't
which
know
is
about healthy,
crazy.
but it does happen. Even just this year, or like look at the
Yeah,
history of Bitcoin. It's dropped
yeah,
massively, massively.
yeah. I mean, when I say healthy, I mean to say that you do need some of that flush
Mm-hmm.
because for you to hit new levels like all-time highs, you're gonna have to get those strong pullbacks to consolidate certain levels on this asset,
Mm-hmm.
right? Like if you go from 50 to 100,000, and then it goes from 100,000 to 150, I would not be so confident in believing that it could stay at 150 if it were not for the fact that 100, like that the 100 level draws back down to something more reasonable, like 80 or 90,
Mm-hmm.
before it rips up higher. You just want to build that consolidation because you want to get new players involved so that their average is around that level and they're less likely to sell it. If you understand what I'm saying.
No, I do. Yeah. No, I really
So
do.
that's just I think our view on Bitcoin, and things will change as the market changes as well. If Donald Trump starts shitting on the asset by doing something very chaotic,
Mm-hmm.
our views can definitely change, and that's something that both me and Kay believe in, which is that don't uphold the same value forever, right?
Mm-hmm.
This isn't like GIC is the best thing in the world because you'll never lose money. This is more like believe in the facts until the facts change.
Yeah, like so for
If the trend,
example, yeah. As we
Mhm.
were like saying, like the Bitcoin ETF being launched, like if you'd asked me in 2022, 2023, or even during the peak of 2020 or 2021, I don't think I would have ever considered buying Bitcoin or even like
That's right.
investing in Bitcoin. It's just now
Mhm.
that it feels like it's become almost institutionalized or brought to an institutionalized scenario where I feel like comfortable actually putting money into the asset,
Yeah,
even if it's
that's
temporary.
right. Yeah, even if it's temporary, right? Like if you can make money off of it, and there's a level of predictability that wasn't there before, allocating capital or even just getting some small, tiny exposure doesn't is not that a terrible idea.
Mm-hmm.
But I also want to, move on
Yeah.
to a different topic. I want to just discuss the overall Nasdaq. Things has been looking super good. What are your views on that so far?
I mean, I look at Nvidia. Nvidia is like your number one thing, and when it comes to Nasdaq these days, is that Nvidia is back to 140, and
Oh yeah,
and like, and after the
beautiful.
dip, after like January, where like it stagnated, February started dropping. There's like a bit of a worry about Nvidia, and I think especially like the quote unquote AI bubble. Now, I don't know how much merit there is to it. I think there's definitely merit to it. I think the merit being that at the moment, the valuation of AI is so high, is the fact that it has so much potential. And I think we're already seeing the potential in the fact that, chatbots, ChatGPT, etc., or Gemini or DeepSeek, they are prevalent and they are sometimes better than just your Google search. I think, for me, I think most of the time, if it's a Google search or ChatGPT for everyday use, I would prefer ChatGPT. Um, but going back to the AI bubble, I think the fact that Nvidia is back to 140 despite the DeepSeek scare and the obviously the tariffs that happen, I think it's a very very good sign. I think we're definitely heading for quote unquote brighter futures, but I think it's still going to be a matter of look and see what happens. I think in the absence of outside shocks, I think we're headed for a continuation of the trend, and that trend being upward.
Yeah, yeah, I 100% agree with that. We're seeing Nvidia retaking, the all-time highs territory. It's not there yet, but it has definitely consolidated for a bit now, for a couple months, such that the levels that it's retaking isn't as euphoric anymore.
Mm-hmm.
And I think that's a big deal because you're essentially confirming that the bull market, which just began, has legs, and you can test it through pullbacks. Now, have we gotten a big pullback yet where the bull run gets retested? We haven't yet, but
Mm-hmm.
we had sizable draw. We had like respectable levels of tiny pullbacks so far, and every time it just hits newer levels. I would feel a little bit more comfortable sizing into Nvidia if we see a significant pullback and it bounces up afterwards.
Mm-hmm.
If we don't get that bounce, though, I would then be concerned that this was just a bear market rally. That's my biggest fear because
Mm-hmm.
bear market rallies are extremely insidious. They make you think that things have changed and the system has flipped,
But it's just a
but it
temporary
hasn't.
hill, right? It's just temporary peak.
Exactly.
Yeah.
Exactly. And the biggest tester of that will be when Donald Trump's tariff deadlines pass and something very bearish happens. Like for example, like if he re-implements the tariffs again,
Mm-hmm.
or he delays the implementation of trade agreements because he realized it takes more than just a football team to craft 182 trade agreements.
Mm-hmm.
Those would be challenges that I see would impede growth and affect the financial markets. But until we get there, though, we can only speculate what might happen.
I think the one thing that I'm noticing in the top five, top six Nasdaq companies is that I'm seeing like Google and Amazon to a certain degree, and what's the other one? Ooh, Apple. Like I'm
Yeah.
surprised how poor they're performing in the market. Like
Oh yeah,
yeah,
I've noticed that.
yeah.
Uh huh. I
So
see it. Like,
yeah.
yeah, go on.
No, I was saying like what I've heard, is that like Apple and Google, they seem to be having less stake in the AI game, and it seems to me, at least on a exploratory glance, is that only the AI companies have recovered as much as they have. I think
Yeah, I
the other companies have recovered, but their recovery has been tempered, it seems.
I've noticed that. You are absolutely correct. That's an interesting point to bring up because speaking just on Apple, I think they really dropped the ball when it came to AI, and they're still struggling on recapturing the investors like mindset of what it can be if it integrated AI into its business.
Mm-hmm.
Um, I'm sure a lot of listeners have iPhones,
Mm-hmm.
but how often do you use Siri or its Apple Intelligence? I've had Apple Intelligence for quite a couple months now. I think almost half a year. if it has been having half a year, I'm not too sure. But I haven't really used it so far because it's just a proxy of ChatGPT. It literally asks you whether or not you want to answer this question using ChatGPT. Like, what difference does that make, right? So I think that on case note that these companies are not really recovering, and it's really the AI companies. There seems to be legs without argument, and it does reveal, potentially that there's probably a shift in market sentiment that the industries now that are industries of the future for tech investments are going to be mainly AI companies and companies like Apple, which have performed pretty well over the last couple of years, even the last 20 years, right? They're starting to slowly become more consumer staples, like consumer
Mm-hmm.
tech staples,
Yeah.
than
Yep. Yep. Yep.
than growth companies. They're
Yes.
no longer the frontier of innovation on the things that investors in the market really do put priority on.
I think in terms of the recovery, to like add on a little bit more, I think Nasdaq or even S&P 500 for that matter, I think the recovery is there, but I think like the reason why Nasdaq especially, right, the Nasdaq index as a whole, reason why it's back to where it was in January or December of last year, and that's because well of the AI boon. And I think to like add on to your point about like Apple, Google, I think Google is I don't know. I feel like Google definitely feel like it's stagnated. Like let's think about Google in the last 3 years. What notable product or innovation have they come up with that is something that's really shocked or wowed people?
Mhm.
I think their Gemini integration is getting better and better, and like maybe there's hope in that sense. Um, but other than that, it just seemed like there's not much. I know they were looking into quantum computing at one point. I'm not sure how that front is going. I know for Apple, I know honestly, Apple is so well positioned because like Apple, right? Apple like their whole product line now, their CPUs, GPUs, like their combined chip, processing chip, they have a neural cores that are meant to run LLM inferences or like like any AI faster and efficiently inside the CPU. And I think that's very very good because let's think about this. You use ChatGPT today. What do? We have to go to an external server that connects to this, obviously, this huge server, like this whole AI engine, right? And then we get the data from there. It's an online inference. And I think that's very costly because everyone has, in today's computer, has a pretty powerful processing chip. I think like the chip itself is pretty powerful and heavily underutilized unless your job involves like video editing or like uh, uh, research or coding or even maybe gaming. But like there's like very few use cases where you're pushing your CPU to 100% or your GPU for 100% for that matter. Um, and I think what is going to happen, what should happen, is we should see LLM inference or language models that are running innately on your local computer. I think if that happens, that would be very good. Very, very good. Because that's just unused compute that can be utilized. And to use it, I think we could do it today. But to use it well, it would need to be baked into the everyday experience. It would need to be baked into the Google, the Word. I mean, not Google's already there. I mean, like the Word, the Excel, browsing, but more integrated in browsing, and so on and so forth. I think there's a lot of space there. So I am hopeful for Apple because they're doing things right on a hardware level, but I think they need to maybe have their own like publishing AI publishing house or tie up with a certain like AI company that does something specifically for Apple products. If that happens, I think I can see Apple doing well. And
Yeah.
to be fair, I don't
Mhm.
mean like the Adobe AI. To be fair, like the Adobe Reader AI is like good, right? It's not like terrible. It's not like excellent either. It's good,
Mhm.
but it doesn't really add too much more value than the Chat GPT or Gemini or whatever LM you prefer to use. So I think it
Yeah.
has to like be integrated into the software and has to excel in the use case of that software. If that happens, I think they're in a very, very solid foundation.
Yeah. So just an overall recap to summarize it, right, for layman investors. Essentially, what Kay is trying to say is that we have the processing power now to accommodate AI into our everyday task. The fact of the matter is that we haven't caught up to that yet. So there's a lot of unused power, like processing power. And you can feel free to correct me. A lot of unused processing power that's just there. And if Apple can take advantage of that, let's say they acquire a startup or an AI dev, right? And they can somehow integrate that into their hardware, that's where the magic may happen.
Yeah, 100%. But I think the question is, how do they make money out of this? So I would assume that's the worry. I think,
Well, that's literally the $1 billion question, right?
yeah. Would it
Right?
be
How, how do you make
would it be a subscription service? But then why would someone not use ChatGPT or Gemini?
right? What's your moat?
Mm-hmm.
That's the question, right? Because you can't just offer the service and charge a premium on it when you have so many competitors chasing the same thing. Because make no mistake, if Apple can do that, and Apple's already a lagging quote unquote AI company, if it's an AI company, the frontiers they would have caught up and conceptualized and even applied this concept already. Um, but yeah, that's definitely a big sticking point that I don't think it's widely talked about. But I also want to discuss a little bit about Tesla.
Yes. Let's reach
Yeah,
go back to Tesla.
yeah. So Tesla has been doing pretty like strange stuff. It took a hard crap yesterday for obvious reasons, but it
Mm-hmm.
also bounced back pretty strong.
Mm-hmm.
Um, I think a lot of investors or traders are a little bit nervous though in trading this company right now, just because the foundation seems to be very flimsy with the tariffs and with the political uncertainty between Musk and Trump, and also the political uncertainty, the fact that Elon has unfortunately alienated a lot of people on both sides of the political spectrum, and this may be reflected in their car delivery
Mm-hmm.
quotas, right? So it is a problematic company, unfortunately. However, I do believe that because of the strong pullback it recently has, if you compare it with the other Magnificent Seven companies, it definitely has lots of room to catch up if the Qs ends up running in its bullish trend,
Mm-hmm.
right? Um, something I think investors or listeners should kind of be aware of is that Tesla is part of the QQQs.
Mm-hmm.
So if it's part of that ETF, anytime there's inflow into QQ, even if you're not trying to invest in a Tesla, Tesla will just acquire that capital. They just get that capital exposure.
Mm-hmm.
So over time, if the overall Nasdaq index and the macros line up very well, Tesla will bid despite it not being the best company compared to all the other Magnificent Sevens.
And I think my biggest problem with Tesla is that, like, as a car company and a software company, I think the price of it is the stock price of it is not reflective of its actual value. I think the actual value of Tesla is, like, in my eyes, lower than the stock price. How much lower, I can't exactly tell you. Maybe 30% lower, maybe more than that, maybe like just 10%. But I definitely think the Tesla price is driven heavily by sentiment. It's it's a lot of sentiment about just not only Elon Musk, but also what potentially Tesla can offer. And I think
Yeah.
like a worry for Tesla for me is that long term, we're already seeing traditional manufacturers come up with more and more green vehicles. And even like German cars like BMW, if you pay get the specific models, they also have their pretty well designed full self driving. So aside from like the name Tesla, it seems like the other competitors are on track. Maybe not now, maybe 5 years from now, to catch up to it. And the question is, what is Tesla having in their back pocket that the other competitors don't, that they will come out to keep their edge? And I think Tesla has the edge, but it's a fading edge, you know?
It is. I think a lot of the edge is already faded. If you
I
compare
agree.
it to its Chinese counterparts like BYD,
Oh,
can you
yes.
tell me what the difference is between like? Can you tell me why BYD would be worse than Tesla? I would struggle to give you reasons why.
Mm-hmm.
You're talking about Tesla, you know, an EV company that only prioritizes EVs, by the way, it only does EV, where it's the main domestic market is 330 million people, right? And not everyone wants an EV, but the market is there.
Yeah.
But you have BYD, which has access to 1.4 billion people, right? That's what, like 4x, 5x more data to collect. So
Mm-hmm.
that's so you can improve, you know, user experience. You have a much more competitive market there. There's hundreds of EV companies, state sponsored by the ways, that will literally rip each other apart, offering the best prices, the best quality of cars, and at the most, you know, competitive price ranges.
Mm-hmm.
So Tesla is dealing with enhanced, you know, super soldier companies on the other side of the Pacific, and itself isn't really facing that intense competition. And my biggest fear for Tesla is that it's getting complacent and resting on its the laurels due to the market cap that it has.
Mm-hmm.
And it's no longer as hungry as it was before. And we can see that demonstrated in the the direction that its leader is doing, like
Mm-hmm.
it's taking, right? Like if Elon Musk was actually concerned about Tesla, he would not be doing this. He would not be picking fights with the most powerful man arguably on the planet and piss him off. Like you just wouldn't. You would do everything you can to provide Tesla that growth environment it needs to expand and expand until it can competitively challenge those Chinese EVs, which I feel are the biggest threat to Tesla. You can
I
already see.
I
Mhm.
agree with that, but I also I don't know when we'll see Chinese car manufacturers in the Western market. And
I mean,
if it's just competing in like the Western market, I think it's like it's not too bad. I agree. I think it's not as dire as you paint it out to be. I think it'd be good if you get those EVs here, but because of
it's
the
it's
relationship between the two countries, it looks like it's not that likely, you know?
it's already entering the European market. It's already displacing a lot of the traditional brands in Europe.
Mm,
And the only reason it hasn't done the same in the US is because the US literally has enacted 100% tariffs, like 100% tariffs
that's fair. That's fair.
on these cars, right? So if a consumer looks at that and it's like, you know what, I'm paying 100% tax on a product that I want to get, there's no incentive. But the Europeans have not implemented such a dramatic protectionist policy, and you're already seeing like, no, actually correct that. They haven't implemented 100%, but they've implemented something like 30 to 40% or somewhere there around that ballpark. And even then, that's not stopping the inflows of Chinese EV imports.
I'm just looking up the market share in Europe, and in the looks like it's 4.1% market share of European EVs. So I think
Mm-hmm.
I don't know when it was when they did come to. Oh, it's just first quarter. Okay, in the first quarter, they
Mm-hmm.
of 2025, they reached almost 5% market share of EVs. And I think
Yeah,
it's fair to say that it's only been around for a very short time. So I think,
it has.
the
It
trajectory,
has.
it's looking pretty solid. Maybe it can reach
Yeah,
10-15% end of year.
which would already be very like scary for the traditional
I wonder. I
automakers.
mean, just quickly look up what Tesla's market share is in Europe.
Yeah.
Tesla Europe.
Because I've already been hearing companies like Stellantis that are actively struggling growing their revenue. Like the revenue that got slashed, but like by double digits over the last couple of years, over last year. And just to give you a recap, Stellantis is a company that owns Chrysler, Dodge, Jeep, Fiat, all those different companies, and that overall conglomerate is struggling. So if that company is struggling, I would not be surprised if the other companies are becoming alarmed with the rapid growth of Chinese imports in Europe.
Mm.
And and I personally don't have an EV, although I would look forward to get one in the future. But I've seen showrooms with these Chinese cars. Maybe they goose it, like they goose it on purpose, but they seem to be super like innovative and advanced compared to the cars that we have in North America.
Hmm.
You guys can confirm that by going on and watching a 10-minute YouTube demonstration. But a lot of these cars were basically life and death for those businesses because they have to compete and kill each other in order to survive. You don't see that competition here, and a lot of these companies just choose to prioritize profit per
Because
quarter over actual innovation and research and development.
always, I mean, the good and the bad thing. I think the bad thing about like the competition, like of this scale, is that you are more prone to shortcuts, and
Yes.
you are prone to overlook what might be considered risky in a less competitive scenario, like
Mm,
risky, dangerous, or like one of those things. Um,
yeah.
and I think that's definitely a worry. So, like for example, if you had asked me, would I drive a Tesla when they launched 2017, 16? I think that was when like Tesla was like starting to come up. Is that right?
Mhm.
Um,
Yeah, I can always shut up, but
yeah, yeah.
I would say so. I thought the first models came out in the 2010s or like
I'm
late
talking
late
about the
2000s.
Model 3. I think the Model
Okay,
S has been around for quite a while. The Roadster and the Model S. I think I'm talking
yeah,
about the consumer models. I think I was like in 2016, 17 was the first
2017, the
17,
Model
right?
3.
Yeah.
Yeah,
So like when the Model 3 was launched, like I don't think I would have bought the EV then. I would have the same safety concerns as I do with like
I
um,
agree.
other companies like BYD. Maybe I just don't know about BYD enough to be fair. And then like over the years of seeing Teslas drive around, hearing nothing horrendous about them, no bad
Yeah,
news or like like catastrophic failures. Tesla has like over like the 4 or 5 years proven that it was good, and by
mm,
2023, 2022, I had my own Tesla, and that's been
yeah,
nice. It's honestly, I love
yeah,
driving it. It's one of like the best cars to drive at the moment, at least if you're not a petrol head, and it's great. I like the full self driving when I get on free trial, and I also love
yeah,
the autopilot, the free version of self driving. It's like a bit limited,
yeah.
but it's sick. And I
I yeah. Go on.
no, I was just saying like if like BYD and like the other like more innovative EVs can improve their reliability and stick
Yeah,
around for 3-4 years without any like major incidents, then I would definitely see myself with another car that's like a Tesla esque car.
yeah. I mean, I just googled it. It does offer like BYD does offer self-driving tech in its vehicles.
Mm-hmm.
So it doesn't seem to me that BYD has is any much different from Tesla other than the fact that it's made in China, right? So
Mm-hmm.
we're getting to the point where I think that Chinese industrial development is climbing up in the value chain, and it wasn't always like this, but it's now starting to pose threats to establish like industrial companies that we would have considered not possible like 10 years ago.
I mean, to be fair, I think since the early 2000s, people have been saying that China is prone to overtake innovation from the West, and obviously we're seeing a lot of it and more success cases, and I think one of the biggest criticisms against that was that people used to accuse China of being copiers. They take
Mhm.
existing tech, they copy it, and the copies end up being cheaper but generally worse quality. And I think to you, some might even argue that just based on like how BYD looks, maybe it is like a Tesla copy. Um, maybe not, but maybe too extreme to say. Uh, but overall, because the sheer number of people there are, the sheer number of just like companies that exist there that are trying to carve out a market space for themselves, the competition. I think like even if it is a copy, at this point the copy is getting better than the original, or at least original quality. So you know what? I'm down for it, and I'm not, and obviously just based on their own R&D, I think it's not too far that the early 2000 sentiment was not too
Yeah,
far in 2030, 2040. We'll be using a lot more Chinese innovation tech. Chinese already
yeah,
look like Xiaomi. Xiaomi took over a huge market space around the world. So
yeah. From Apple,
yeah,
I think,
yeah,
right?
yeah, yeah. Apple. There's also like, is OneNote Chinese? I forget. Um,
Yeah, I think OneNote's also Chinese,
yeah, yeah, yeah.
but OneNote's been around for quite a while. It's been here for like over 10 years now, I think.
Yeah, yeah, yeah. But Xiaomi was a breakout.
Yeah, no, I agree, and a lot of their like features are much more user friendly and less like autocratic compared
Mm-hmm.
to Apple. Like Apple is great for the average consumer, but it's not great for the experienced like user, like who actually wants to do something different from the phones. Like for me, it's perfect just because I don't really do much on it. I just text, I surf the web, and I do trades when I have to, and I go on social media. But I'm the average user, right? There
Mm.
are people who go above and beyond this, and I think that's when the other phones, aside from your flagship Apple, starts gaining some grounds.
I think like the people who genuinely go above and beyond in that, or they to the point where they don't want Apple, is like very few and far between. And I think like, and honestly, if you're getting to that point, I think most people would rather have a computer of their own, like a laptop or something, or a tablet
Yeah,
to do the
yeah,
things they would. So I think Apple in a way has done a very good thing where it's like it's captured most of the audience, and I think most of
yeah,
the audience are like just average users. um,
yeah,
and I think Tesla is doing something similar now, where it's like slowly becoming more of a staple, like a fashion statement. You
yeah. It's a consumer
yeah,
staple,
yeah. You
or
instead of
cars in general.
instead of like a Honda Civic, why not go for a Tesla model, whatever, 3 or S or Y? Not
Yeah,
S. I think this is a premium one, but yeah.
its brand name also is very unique and provides a level, like a visual image of what an EV should be that other brands don't. Right?
Mm-hmm.
If you think about Volkswagen or Chrysler or Dodge, GM, right,
Mm-hmm.
Ford, it doesn't conjure the je ne sais quoi that Tesla offers. Like when we think of Tesla, Tesla is EV. It is just a synonym for EV.
Right.
BYD's name isn't.
Mm-hmm.
The other companies' names are not. BMW is not, right? Tesla is, and I think that has its life of its own, and it definitely does represent the benchmark for what a car is at this point.
Yeah. Yeah.
And I've been in a Tesla just in my friends' cars. I've always been impressed by the features that are there. It always continues to surprise me, especially because of the fact that it keeps evolving so quickly.
Yeah, I think Tesla keeps saying they're a software company, and honestly, if their software is can really stand out and keep getting better, and like obviously stay reliable, then maybe Tesla will continue to like do well in the future as well. Even if like
Yeah,
competitors offer more advantages, they'll just continue to stick around.
yeah. I've read stories though where the European like softwares, their softwares are absolutely like barbaric compared to Tesla. Like I haven't used them
Mm.
obviously, but I've heard that they're struggling to design in-house software for their cars because they simply don't have the know-how or the experience that the Chinese companies and Teslas have had years in fine tuning.
I would I don't know about the situation, but if I were to say anything, I think it's that they don't have the amount of data and the right
Yeah,
quality of data to
yeah,
to do it. I think that
yeah.
that's probably it.
Yeah, yeah, and what Kay is referring to is essentially the fact that EU has very strict data privacy, and it's much harder for tech companies to monetize that data and use it to refine their products and services. If
Hmm.
is that what you're saying, right? So
That's I think that's half of it. I think the other half is that like in EU, there and maybe I'm wrong, but there don't seem to be like tech giants. Like in
no, there
China,
isn't.
like in China and US, you can look at a company and say this is a tech giant. What's a
Yeah.
EU company that comes to your mind when you think of a tech giant?
No, I mean I think of ASML. That's one.
Hmm.
That's the one that designs lithography machines for foundries, right? But
Mm-hmm.
that's the only main one I know. There's like others too. Europe is definitely very involved in semiconductor manufacturing,
Mm-hmm.
but if you're excluding things like Spotify, I can't really think of tech giants on a scale of multi-trillion capitalizations
It looks like they
in Europe.
have Siemens, like the Siemens and Dassault
Yeah,
systems.
but Siemens has been around for a very long time. It's been around for I think
Yeah.
what, like 100 years? Let me see, 100. Siemens company year of founding. Like it's been here since 1847.
Okay, so what I mean by that, right, is because like think about U.S. and China. In U.S. and China, you have like tech companies that have so many users using their tech on a daily basis that they can collect a lot of
Yeah,
data. And like I don't think Europe necessarily has a company that
yeah,
collects all this user data. I think the
yeah.
EU laws are definitely a caveat as to like why they can't collect it or why may not have as much. But I think even
Mm-hmm.
without the laws, just they don't have a place, a giant repository, a giant database of just
Yeah,
data lying around to be used for anything. The reason why I think, like for example, OpenAI and like why Microsoft and Google and even Facebook Meta can make their AIs is because they have data from users from basically 2000, right? Just lying around doing nothing, and it's all to their use case. They can use it to
yeah,
do whatever they want, and that's how this AI training works. And I know people say that they don't use certain data, etc., etc. But I don't know how true that is. And
yeah. I really don't know how true
I
that is.
don't I don't think it's true at all. But yeah, you never know.
Yeah, yeah. Like I've seen how Meta has been exploiting our data for so many years, and they literally sell data for political reasons. I have definitely no faith in the fact that they actually respect our data. Like they can say that, oh, don't give us permission to use this, and you say no, and you think you're all safe. But how can you hold them to the courts when that happens? Like first of all, how are you sure they're not using your data or they're using your data? You need to verify that. You
Hmm.
would have to sue them, and then you would have to have undeniable proof that they've broken this trust.
Yeah, but
And
it's
as
hard to do because their systems are
yeah,
so closed. So like,
exactly,
yeah.
exactly. Their system is so closed, and like one person or even like an entire community taking on a multi-trillion company, it's just not feasible. It's not something that I think they would be afraid of, and it would call our bluff in holding them accountable to actual data privacy.
I mean, the one thing I could probably say is that like I don't think Meta is as nefarious as perhaps like NSA or CIA or whatever other people dream up to
Yeah,
be. I don't think they're necessarily like nefarious in that sense, where they track exactly where this guy is at this point in his life at 4 a.m. on a Sunday morning. I think
No.
what they care more about is that you can take this data and then you compare with hundreds and thousands and millions of people, and then with this data set you get a picture of what humans behave like, and that
Yeah,
is more powerful. Or what
I
the
agree.
ways humans communicate, the ways humans, I don't know, travel from here to there.
Hmm.
So there, that's where the data is being used. So I don't think it's like an individual by individual cases, but I don't think they definitely. I don't think they respect our data. I think that data is being
No,
used everywhere,
no,
anytime
no.
they
I'm pretty
want.
sure they're shamelessly using the data. Like
Yeah,
they're not. They don't care. Um,
it's a good and the
but
bad. I mean, the bad is like
yeah,
there's no privacy, but the good is you get new tech like OpenAI,
yeah.
like ChatGPT. That's
and
it's
and
pretty
and,
good.
and yeah and that has often been the ethical dilemma for tech, right? Especially in North America, not even Canada, like more in America, right?
Mm-hmm.
You have venture capitalists who are hungry for growth and startups, and you have a court system that is extremely laissez-faire when it comes to regulating how data is utilized and how companies operate themselves or uphold themselves to certain standards. It's more of a wild west here, and we see that reflected in the growth, like the financial growth, the tech growth, and how North America is one of the only regions on the planet that can compete with Chinese tech development despite the lack of scale.
Mm.
Like we, how do I phrase this? We compete or outcompete China simply because we have a better startup culture and we have deep level of capital and liquidity that needs to just find something to invest in. It doesn't matter how stupid it is. We'll go balls deep into that position or in that company to make it grow, and we will acquire other companies in other countries around the world, especially in Europe, will prey on Europe and will consume some of their startups, and we push them and we move them here and we get them to develop. And ultimately, that's what we've been doing because we don't have the scale in having over a billion consumers generating that much data. It's just I think basic arithmetics. At some point, maybe we might lose that. We haven't yet, and I doubt we will, just because in this like realm, this is the analogy of getting immigrants. Like we were basically getting orphaned startups and we're just pushing them here and we develop them. And then
Not
once they
just
get big,
startups.
we
We also get the well, America just tries to get the brightest minds
yeah,
from all over the world, especially like India and China, where like
yeah,
there are a lot of
especially those
people,
especially those two
very
countries.
very obviously. Oh, those countries because like they have the most population, so they're more likely to turn up with ultra geniuses, like very talented people.
Yeah,
And then
that's right.
that's been like the U.S. strategy of to keep on top is to just keep getting the talents to move over with the promise of a better quality of life, and that's worked so
That's
far.
right.
I mean, the worry
That's
is like the H-1B and Trump and all that stuff. That's always been the worry, in
yeah.
modern days.
I
But
I
let's
think
see.
it's overstated. I know that a lot of these companies are complaining that they're not getting that hyper talent, right? But you also have to address the labor problem. There are domestic labor forces who are not happy with the H1B1 situation.
Yep.
So you have to reconcile that. Otherwise, the politics is not feasible. Like you're gonna have populists who are voting in people who are anti-immigrant because the jobs that they promise, oh, you go to university, you don't have to do manufacturing anymore, you can go high end and make like high six figs working in tech. If that's not even a reality anymore, you're gonna have a really big issue.
Yeah,
But
that's
I
why
do,
America is like kind of in trouble, right? Because like you have to
yeah,
either like slow down the
slow down
acquisition of
growth.
talent and like try to
Yeah,
cultivate your own talent,
yeah,
and then you compete against billions, or
yeah.
you keep it going and then like things don't look good
Something
locally.
breaks.
Yeah.
Something breaks, right? Like it, talking about this really reminds me of like stock market. You got to consolidate at some point. You got to digest the progress and the growth you made, because we've broken a lot of things in order to get here, and we're still breaking a lot of things. Like, so many jobs are going to get laid off in the coming decades as AI matures properly, even in the field like medicine, right?
Mm-hmm.
So what's the solution? Are we going to retrain these people? Are
Nope.
we gonna basically give them UBI and feed them with free money for the rest of their existence because they've been laid off by AI? No one has an answer to this, and we haven't even tried to begin having a conversation about doing this yet.
Yep.
And and I find that, and I find that very very troubling, because we try doing the consolidation. Just looking at Europe, right? We try doing the consolidation, and the only thing that happens is that you get left behind because other people are hungrier than you, and they don't do that, and you get left behind. So while your people might be more satisfied with the system and they're more complacent, and you're not getting people rioting on the streets and having insurrections, you're also being outcompeted by emerging economies like China or India.
I mean,
So you have to pick.
I think like obviously I'm always a fan of developing locally. Like I think
Mhm.
if US could have better education and not have a constant declining education metrics every like decade after decade, that'd be definitely a very very good thing. Um,
Yeah,
and I think the low birth rate is also a problem. I think that's right. 'Cause, I mean, like if you want growth, you need more people. Is that? I feel like that's like I don't know the most like trivial logical statement you can think of when you think about
yeah.
growth, right? Not only do you want industrial growth, but for industrial growth, you would probably want a growth of population.
Yeah,
And
you want a consumer market, a sizable consumer market that is able to actually buy things.
like you brought a very good point about like people might be losing a lot of positions, a lot of jobs that were like middle positions, not even like the low position, like middle tier positions, and that's scary. And the question is, if all these people are unemployed, how are they going to consume things that make the billion-dollar companies, trillion-dollar companies, trillion-dollar companies? Like, where are they going to get the money from if your population is becoming increasingly unemployed, or they're employed but in vastly lesser paying positions?
Yeah,
I mean,
yeah,
that's like, how's that supposed to work around? Are people supposed to just get addicted enough to your tech and the lifestyle that despite being very far down in their personal finances, they continue to do bad actions, like addictive actions, like, I don't know, X premium, or
yeah.
etc. I don't know. Keep
I
buying
mean,
cookies, keep buying only the snacks and stuff, despite like maybe it's better to buy groceries.
I mean, this is something that I've read into, right? Where it's like, what do you do when when you have to resolve unemployment, and how do you allow companies to continue growing? So, um, oh, it's going to be a long podcast. But
Yeah.
basically, essentially, what's going to happen is that, and it's happened for 30 years now, right? With wage stagnation in the U.S. When a lot of these companies moved overseas, especially to Asia, their bet was that people would hyper scale into higher value positions, into offices, white collar, and to law into lawyers, doctors, or whatever, so that they could have more comfortable living standards. They work in services, and they can have higher purchasing power, and they can buy more things, which drives growth. The problem is that not everyone can move into those positions. Not everyone can be a graphic designer. Not everyone can be a content like Instagram influencer,
Mm-hmm.
right? Not everyone can do those high capital intensive jobs, right? Because you have to require a high level education or a unique set of talents that
Yeah.
not everyone can
Yeah.
develop. You
Mm-hmm.
need the jobs where people with no talent or people who have struggles accumulating human capital can just go in there and plug and chug and check in and check out and just get a sizable paycheck.
Mm-hmm.
We don't have that anymore.
Mm-hmm.
So we've been replacing it. We've been replacing wages with credit. so we've been living beyond our means, using credit cards, buy now, pay later, that type of scam,
Yep.
and you get people addicted not to the tech itself, but more worryingly to credit,
I
to
mean,
debt.
like I always assumed that it'd be in the best interests of like the billion trillion dollar companies that you promote more human growth, as in the fact that you promote the population to live longer and
Hmm.
increase the population, so you naturally increase the number of customers and the number of sales
Right.
you have. I feel like that's a very, very logical assessment, but that doesn't happen. And I think the reason why it doesn't happen, unfortunately, is because of the capital market. And I know, like,
Yeah.
people, they promise to shareholders quarter after quarter, and it's like, wow, this was a good quarter. Now the expectation of the market is the next quarter will be better, right? You know,
Yeah.
the market doesn't expect you to get worse. The market says, oh, perfect. Now that you have hit this milestone, we expect similar quality and improvement over time. And no,
Exactly.
that just doesn't happen. And so, but they have to make it happen. And so then we see more and more short-term policy making. We see mass layoffs. I mean, that to be fair, some restructuring is healthy and should happen. But what irks me is that when a company says, guys, we made the highest revenue we have in decades. This is our all-time high revenue. Also, by the way, we're firing 15% of our entire company employees. By the way, we
Yeah.
also made the most revenue ever. I mean, yeah,
Yeah.
and that's the funniest, not the funny. I think this is funny like in a dark way. Is that the number of people who were fired and like that lost their jobs? You look at their paycheck, their combined paycheck, and maybe compare to the CEO or like the board member's paycheck, and you wonder like, maybe the board can take a salary cut. Maybe, I don't know. Maybe that's the idea.
Yeah.
You can retain the employees, keep salary cuts just a little bit. You know, like 15%. That could.
Yeah, that's not going to happen. The argument has always been for executives, for themselves saying, "Well, if we're taking this action of cutting my pay, this is a slippery slope because now you're disincentivizing good talent from coming in this company. Because if other companies are doing this, but you are, yes, you're making it fair, but other people aren't playing by this rule,
They're
or
not.
other companies aren't playing by this rule, and now you're going to get outcompeted just by talent alone. You're losing talent.
I mean, like
So
that there are always exceptions, and I wish like the global political scheme was healthier, capitalism was healthier, as in like we promoted like more sustainability. But it is what it is. But just to like I think end off, I completely agree with you. And I think like the only thing I could point to, and I know it's an exception, is Nintendo. I think Nintendo has proven like over the decades that they're willing to take executive pay cuts to retain their employees, and they are a very, very successful company. So respect to
Nintendo
Nintendo, but
Nintendo is unique though because there's only one Nintendo,
there's
right?
only one
There,
Nintendo,
like
exactly.
it it has a really strong moat. Its IP like control is very strong.
That's true.
Um, it's also its culture is very unique. You have a very collectivist Japanese culture that prides itself in integrity, honor, and making sure the employees are well cared for. Right? That's not really seen in the North American or even just American company culture. You do something like that here, people are gonna fire you for even suggesting the idea because you're not pro growth.
Yeah, yep, yep,
Right?
yep.
Like that. The funny part is that you do something like that here, people think you're communist. People think that you are the opposite of what this company needs, and you would destroy this company
Yeah,
by caring so much for the well being of the employee.
yep.
Now, is that wrong? I think to a certain extent, yes. But if you keep doing this though, where and the argument is that if you keep spending too much time on caring about the employees and not on growth, you will eventually get outcompeted. That's just how it is. Like you
There
see that
has
in
to be a
Europe.
balance. There has to be a balance.
There has to be a
Like,
balance. So I
and
do
I
agree.
think like the I think the whole point of the government is to determine the balance, try to determine the balance, and step in and do things to make it right. But I mean, at the moment, I think just based off education alone and look at the U.S. healthcare system, and like there's nothing more to be said there, and that's it. I don't know. I just did assume like the government is doing enough, and I think obviously the problem is the government is largely not honestly subsidized, but it's largely influenced by the
Yeah,
very large companies, right?
yeah,
Because like they're the ones who do a lot of lobbying. They're the ones who like sponsor a lot of politicians and get in their good books and whatnot.
yeah,
The meme post that you see like the Congress members outperforming all like Warren Buffett, and that's like a classic meme post you see, and it's like there's definitely merit to it in like the stock market.
yeah.
I don't know.
Yeah, yeah, it's pretty bad out there. The last thing I want to touch up before we wrap up this podcast
Mm-hmm.
is once again the bond market.
Mm.
So,
Let's have a
uh,
look.
I've seen some eye openings from the bonds. Looks like the bond traders are stepping back in,
Ooh.
doing its thing. Um, today it wasn't super great, but
Mm-hmm.
if you look at the last couple of days, it's just been kind of slowly going up,
Mm-hmm.
and then it had a pullback today, right?
Yeah.
Because of NFP data, job data was better than expected, so markets kind of delayed the rate cut from I think July to September for the Federal Reserve, but overall, it looks like market confidence in the U.S. dollar and in the U.S. government is coming back. The yields are stabilizing, and the yields are coming back
Mm-hmm.
or down. That is not going up anymore. Um, I would like to kind of summarize what's been going on with the Big Beautiful Bill or BBB, the thing that triggered Trump and Elon to have this verbal field over X. And essentially, what it is that it's a budget. It's like a budget plan, a budget bill. And the biggest sticking point is that it's going to make the 2017 Trump tax cuts permanent, and it's also going to introduce tax cuts on tips, for waitresses and stuff like that, and tax cuts for I can't even name all the other tax cuts, but the biggest sticking point, though, the biggest sticking point is that it would raise the debt ceiling for the U.S. government by around $5 trillion,
Mm-hmm.
right? Which is astonishing given the fact that the U.S. debt's already at $37 trillion. The CBO says that if the trajectory, continues, if this bill gets passed, the GDP um, to debt ratio, or sorry, the debt to GDP ratio will surpass World War II levels by 2032 or 2034.
Oh no.
Yeah, right. That doesn't sound great, right? That
No.
doesn't sound great.
No.
And from compare, if anyone were listening to the last episode, we talked about how it's not um, the amount of debt that matters that scares us.
Mm-hmm.
It's the rate of change that scares us. So
Mm-hmm.
if you see the government running 7% deficits, borrowing, like literally running on 7% deficit of GDP every year during peacetime when there's no war, during a time of economic growth, what would you, how big would that deficit be once you're in the recession? Like, I deeply wonder about um the future, about what's going to happen if you've already pulled down all the levers you need when times are doing great, and you're borrowing even more when times are bad in order to subsidize for higher unemployment.
Mm-hmm.
And once again, as I said last time, I don't think you can trade the bonds. The bonds are shit right now. They're terrible. You have a administration that clearly does not care one single ounce about fiscal conservatism or fiscal discipline, and it will be reflected in the bonds, as it would just chop, will go up and go back down, go back up and goes back down. And until we see real economic weakness where there's unemployment shooting up or the GDP has, actually contracted, you won't see any good movements on this asset class.
Hmm. Funny thing about
Okay.
like the debt, I'm just looking at it now, is that
Oh, the debt. I think it's somewhat manageable.
yeah.
The only thing I'm a little bit worried about though is that we've gotten to the point where we're spending $1 trillion on interest, or us a little bit over a trillion, like 1.1,
Hmm.
and that actually exceeded the level of defense spending.
Oh.
Like,
Hmm.
I don't know what the hell they're doing, but Jerome Powell isn't lowering interest rates for good reason, right? Because you don't
Yeah.
want to like accelerate inflation with a giant deficit like this.
Yeah.
But they're not implementing cuts on anything.
I
They okay, no, that's not true. Was sorry, what?
No, I'm like just thinking like, you know, was their philosophy of like lowering tax rate was to promote more spending? Because like
Yeah,
for
more
example,
growth. Yeah, more GDP growth. I think and outgrow the debt. That was their goal.
yeah, because like for
And
example, when like we had the what is it called, the winter Christmas no tax thing for like
yeah,
restaurants and gifts and stuff. I remember I think I spent more than I would have ever spent if there was no tax
yeah,
relief. So
yeah,
maybe this is like a short-term thing that's going to benefit them. The question is, will it scale into the future? I don't know.
yeah.
I don't know.
The other thing though is that it doesn't, like, in my opinion, and you can say it so differently, but in my opinion, I don't think it permanently structurally changes growth, because growth is affected by a lot of things, by how much capital investment there is, if our company is actually investing and allocating capital in appropriate things and not just like inflating their stock through buybacks. Do people, who have this money, are they rich or are they poor? Poor people are more likely to spend higher amounts of their money, relatively speaking, compared to rich people.
Yeah.
And is the demand front loaded? If you're talking about Christmas, I certainly front loaded demand. Like
Mm-hmm.
like I bought a lot of stuff that I would have needed maybe next year, but
Mm-hmm.
I just bought it then. But
Yeah.
then I stopped spending as much, and I actually had to pay down some of my debt afterwards.
Mm.
So things kind of evened out afterwards, right? Does that actually promote growth? I don't know. Maybe temporarily, but that growth just gets subtracted in the next quarter.
I think like in terms of like financial assets, the idea is that if you can take bigger risk, especially like the business stuff, right? If the business tax is
Yeah,
lowered, that means like you can technically take a bigger loan yourself, like the U.S. government,
yeah,
and
yeah.
that means that you have. So, for example, someone was like 100,000 short or 50,000 short of like a of being able to bring their business idea into fruition.
Mm,
Now they can, but I will this business succeed? Who knows? And if the business does not
yeah.
succeed, that loan is pretty big, probably bigger.
I know.
Maybe it's
I
not
know.
something you can
You
afford to
lever.
pay back, and that's gonna be very interesting.
That's another issue, right? So,
Yeah.
yeah, yeah.
I
But
would be very
but yeah,
curious
yeah.
to like sit down and like listen to like if the chief economist, if to like hear his reasoning. Do you know if like if they have like any material about the bill like that's like actually intellectual and not just, propaganda or like not?
Probably,
Mm.
probably. I can like find something. I mean, I've read some critical reports on it, but the people who actually wrote this damn thing, they don't even know what it is because it's over 1,000 pages,
Oh
and
God.
apparently by the law they have to pass it in 72 hours. So how the hell are you supposed to
That
read
sounds
something
like
that
a
thick?
shitty tactic, like a shitty political tactic just to like
I'm not. Yeah,
yeah.
I'm pretty sure what Trump did or what the Republicans did was that they put a bunch of crap in there that people had no time reading, and they knew people would hate that shit,
Yeah.
and they just put it in there, and they just shotgun the bill through the procedure process so that by the time it's passed, it's too late, and no one can basically say, "Hey, we don't like this."
Yep.
The biggest sticking point on that though are cuts on Medicaid, which is basically cuts on covering like healthcare insurance subsidies for poor people. So
Mm.
they're planning to cut that 793 billion over the next 10 years in order to save costs. Now, if you did that, it would be uncomfortable, but I would say maybe it's you need to do this because obviously the budget needs to get cut somewhere, and unfortunately, healthcare and social spending is the biggest one. Social security, retirements, and like healthcare is the biggest one, so you have to cut them. But then they radically increased the defense spending from 800 to nearly a trillion,
Oh, yeah. At the same time,
right?
that's
Right, and then they increased tax cuts on the wealthy who don't really need it
mm-hmm.
in order to spur growth. And in my mind, it doesn't make sense. That's like washing your hand with like washing your left hand and then using your right hand to grab dirt. Like it doesn't make sense. Like nothing has changed, right? If anything, things have just gone worse because the trajectory is worse. You have less tax receipts.
I mean, it just sounds like just like the fundamental belief of trickle down economics. Surely it will
Yeah,
trickle down, right, guys? Surely,
yeah. Surely it's been doing this
surely.
for 4 years now. Surely the wages are gonna go up now,
Yeah,
right?
yeah, no,
I
no,
mean,
yeah. Just around the corner, bro. Just around the corner.
yeah. I mean, if we're gonna talk about that, like in the next like last like 5 minutes or so, I would say that the model has worked profoundly in increasing the wealth for the wealthy and the stock market, and
Yeah.
It spurred innovation because you have an elite class of people who have trillions and billions to allocate, and they just dump their money into startups, and that's where the startups grow. But it's not good for the American people,
I
unfortunately.
mean, like, at what point do we say we should care about the people and less about the progress? You know? Am I
Yeah, I know.
am I crazy with that? I mean, just think about it. Like in like the last century and a half, we went on literally being the our max speed of travel was a
Yeah,
horse, 60 kilometers per
yeah,
hour for like an hour and a half, 2 hours, whatever, however long the
yeah,
horse can run. Now we have planes that go around the world, and just to get like I don't know a computer, that plane and like I don't know ships, they have to circle the world like 8, 10, 16 times to make a
yeah,
product to get into your hands.
yeah.
I
And
that's crazy.
not only that, right? And we're gonna go on even bigger macro scale. We have rockets that go to Mars
Yep, yep. We have rockets that
that
go
can send people to
outside the
Mars if we
planet.
want
Yep,
to.
yep, yep.
Yeah,
We
right. So
this is the biggest thing actually. I remember like I love seeing this. Is like in the 1900s we went on not being able to fly to in 70 years landing on the moon. Isn't that
yeah,
ridiculous progress?
yeah, exactly. And the brilliance of the model has allowed us to do that. Like our processing chip is what like a trillion or a trillion times more powerful than the first chip that was invented.
Yep,
For right? So everything has exponentially increased to the point where we have diminishing returns. Like my iPhone can only get so powerful. At some point, there's a lot of unused processing power
yep,
that we're only starting to appreciate now because of AI, which itself took like 20, no, 50 years to get into because of the research that was needed to develop the theory.
yep.
So,
I don't
do
know.
we need to
I'm
slow down here?
I'm happy
It's a
slowing down. I'm happy slowing down.
yeah, it is a dilemma because then you're risking productivity slowdown, and unfortunately productivity plays a huge role in GDP growth. So that growth slows down, now you have less, the pie is getting smaller for a bigger population.
Mm-hmm.
So again, like it's hard to say. Like I think the model has worked exactly the way it should. It helped the rich, it helped spur innovation, which is what we needed, but do we still need innovation to grow at the same rate? I don't know.
I don't know. I just think that
I don't know.
like there's just sustainability problem. There's like a disparity problem, whether that be in like economics or class or whatever.
Yeah,
And I
yeah.
think it's going to reach a boiling point. I mean,
Anyway,
yeah, I think I'm fundamentally long,
yeah,
but I am worried about huge events that might drastically
yeah,
alter our life. And
I agree.
and honestly, unfortunately, we should probably end on this somber note. But hey, stay positive. Try to think too
Stay
much
positive,
about the
guys.
existential threats.
Yeah,
And hopefully things will work out for the long run. Thank you,
yeah,
everyone.
and
Oh, sorry, you're saying
yeah,
something. One more thing.
yeah. I want to say one more thing. I know, we promised a shorter podcast, but we're still flushing out some details. I think this is still a little bit over 1.5 hours, right?
Yeah, Yeah, it's quite
Yeah,
long.
it's quite long. So in in the future, we will consider making shorter ones, maybe around 30 to 40 minute, depending on the feedback. But 30 40 minutes was what my goal is
Hmm.
because I want to make it more digestible to the listeners. But for now, just bear with us while we flesh out all the theories and take on a more educational route so far. And yeah, as Case said, we hope you enjoyed this podcast. We had talked about a lot of different things. Feel free to selectively listen on the things that you find passion in, and stay tuned. And we will see you next week.
Bye bye.